A lot of news in the world. First is all about the new tariff tax plan by the US administration, something which markets knew was coming. And it is something which in the near term is only going to have a two-way effect, which is it will ensure that the US excess spending will continue, and the impact of the tariff, which would have hit both the consumer power and the ability of the US administration to really monitor that and to really safeguard that by additional tax saving would be taken care of. It will also ensure that in the near term the 10-year or the US Treasury paper will remain elevated. So while the global headlines are big in nature, they are not really going to have a large impact per se, at least in the near term, because US markets are not worried. Asian markets are recognizing that yields are going up. So everybody is talking about it and nobody is panicking. That's a global setup for you, that big headlines, nothing which really could cause a damaging price action because there is no news development. All markets are moving as per expectations. I can say the same for India also, Aisha, which is that markets are moving as per the script. The script of how markets moved in the month of April was a function of uncertainty. The script of how markets have moved in the month of May has been a function of certainty. The script of how markets would move in the month of June, I think, would be flows and momentum. Because earnings are over, no news is there. You're reaching into what could be called as a visible, clear, and perhaps a obvious resistance, technical resistance. What we say in technicals, a short-term trading top. I think we have a short-term trading top in place. Why? Because at high level supply is coming, there's no news trigger, and markets are taking it easy.
Yeah, that seems to be the case. And here's what Donald Trump has said. Now it's time for our friends in the United States Senate to get to work and send this bill to my desk as soon as possible. There is no time to waste talking about the new tax bill which has been in place. And of course, there has been a little bit caution on the street. I mean, you didn't have a rara comeback by the US equity markets for sure overnight. In fact, at best, they were tempered with a little bit of a negative bias, if you will. So investors did weigh in on the impact of the spending on this bill getting passed. The S&P as well as the Dow, they ended marginally lower. WTI crude, though, that's fallen about 0.6% once again. It's hovering around that 61.25 mark. There are concerns about potential crude surplus as well. And you've got Japan, wherein the core inflation has come in above expectations in the month of April. PBOC has injected another gush of liquidity in the banking system. So Asia, on the other hand, is holding a lot better than what the US handover was. You've got Japan, which is holding up almost about 1%. Hong Kong as well as Shanghai are both trading quiet, but with a positive bias. What about the implied open for us? Because let's check in on that too. After a little bit of a shake-off for our markets, it seems like it's pegged at least marginally higher at those 24,700 thereabout levels. But again, it's really back to our markets. And the big question is, why exactly have FIIs starting to retreat once again?
Okay, I'll try and put data so that we can at least establish that why they're selling. I think bond yields are moving higher. Now, typically when bond yields they go higher, if you're a global investor, you would say that, look, if bond yields are going up in my local market, why do I need to go to some other markets? Having said that, this time I don't think the selling is going to be permanent. And the reason why I feel the selling is not going to be permanent is because the dollar index is weak. And 3 months out, 6 months out, there would be a lot of base effect which would start kicking in for US economy, and at least for the developed markets. So while we can look at the FI selling and say, okay, have they came and have they gone back? I think the selling may not be very long-term or damaging in nature, because for FIs to sell, two things in the short term have to work against emerging markets: the dollar index and the yields. Yields is moving against us, but not in a very alarming manner. Similarly, the dollar index is still at 100 and money is still moving out of dollar index, and that dollar as an asset, that explains why Bitcoin is going up and other assets are going up. So I don't think the selling in the FI selling is going to be permanent. However, in the near term, it will be damaging. It will create a top and it will surely have an impact in the way how the near term market momentum would move.